Hello, everyone, and welcome back to the J22 report. I am your host, Johnnie Market. You all know that drill. Hit that like button and subscribe if you already haven't. Just want to do a little disclaimer. Nothing I say should be construed as investment financial advice. This is just my opinions and thoughts on the markets. Investing involves risk and consult a professional advisor before you do so. So yeah, sorry I haven't been doing a video in the last couple of days. I've been very tired. I wanted to do one yesterday, but I work full time, so I'm not able to do what many others do up to the minute to the date. Well, they don't even do it that anyway, but not able to respond to every little thing. But let's get into the economic data first. If you look at it here, retail sales, that was up 1%, over 3%. Normally they say like one, like 0.3 is 3%, but I guess now that was just narrative lies. It's really 0.3% or whatever. And if you look at that, like that was actually considered good by the markets and good data. But if you look beneath the surface, Empire State Manufacturing, that's down 4.7%. Philly Fed Manufacturing down 7% or 7 points. And if you look at, let's see, I'm just going off capacity utilization 77.8 instead of 78.5. Industrial production down 2%, manufacturing production down 3%. And look at this, the housing, the home builder sentiment 39, way below 40, the consensus of 43. So home builder sentiment's not very good. And if you look at today's data, 1.396 million building permits, below the consensus of 1.43, down 4% month over month. Housing starts down 6.8% month over month. Michigan consumer sentiment was higher than expected, but if you look at it, despite the retail sales, you can tell the real economy is not all that great if you look in the other data. But the market's viewed with retail sales as very strong. And you can tell the markets, they're up today. Dow's up 96, but if you actually look at it going to a 5 day, you can just look at it right here, August 4th, August 15th, and look at that. It just shoots up and just keeps going up. It was down at one point today, but it came back. Gold, on the other hand, is doing very well. I think the other data, non-retail sales data, is helping it, but I think just a lot of people are nervous and a lot of people are buying gold, and that's pushing things up. I don't think it's retail. Look at that. Gold 2,500 broke 2,500. So my target of 3,000 or 2,700 to 3,000 looks like good. Silver that's still below 30. I think it's eventually going to break through over the next year. Remember my top target 3,000 gold, 50 or $60 silver. I don't know if silver will, but then we're going to have an economic crisis very soon. It's going to be after the election year. Uh, we'll see what happens. Anyway, there it is right there. See, that's the economic data. But gold is going to do, and I think it's going to outperform after this next crisis up a lot. The US, in my opinion, over time is going to break apart and it's going to be really, really bad. I do think it's important for people to get into the right state, no matter where you live. Get into the right state if you're going to stay in the US. I would love to have a newsletter and talk. I'm not going to talk much about it, like where you should live, what are good places to do well. Because despite the US, I think some areas are still going to do very well and will be good for people to live. But I mean, I don't know what YouTube's terms of service is, so I'm not going to get too much into this. But anyway, let's get rid of just talking about a couple of things in the news. I have a lot. I'm going to do a couple of videos over the weekend. But look at this, retail sales soared 1% a month. I've been following it, but the main reason it's a downwardly revised 2% drop in June. So June, which the numbers were 0 or positive, they revised them down. This is like the This is like the jobs numbers. So let's say it's June, they have a big number for June, and then they would revise it down so that way they can report a big number in July. And that's what they're doing. They did it with the jobs numbers. And the thing is, the market's going to catch on to this eventually. I don't know when, but biggest increase sales of motor vehicles rising the most, followed by sales of electronics and supply stores. And you can see it's the incentives, margin. I talked about this earlier. That's what's driving. This isn't healthy because they're compressing their margins to sell motor vehicles. So, and look at its electronics and appliances, but sales up at the grocery store. And if you look at this, retail sales not adjusted for inflation includes mostly goods. So if you look at it, I mean, electronics and appliances, this could be like security systems, not stuff people want. Grocery stores, that I think that's purely inflation. In fact, if people are spending less at the grocery stores, that's actually a good thing. Or the same, like grocery stores. So building material and equipment, that's probably healthcare right here, 8%. Furniture, food and services and drinking places, that's probably more inflation. I don't think that's, and then gasoline, which is more inflation, but look at this, what decline? Miscellaneous. Yeah, because people are just buying solely what's on the list and shopping. They're not buying cool stuff or anything. Sporting goods, hobby, music, and books. This is a bad thing. It shows people are reading less. But sporting goods, hobbies, yeah, people don't have leisure time. They're not as fun. Clothing and footwear. Yeah, people are poor, so they can't buy clothes. Like if they have a shirt, it's ripped a little, they're like, all right, well, I'll use this. Or maybe, this is ripped a little. I can't wear it out. So I'll wear it more when I'm at home or in my apartment. And I'll just keep it here, but I'm not going to get a new one. Before it used to be something ripped. They would just, or what some people might do if they rip sleeves, they might cut off and do a sleeveless t-shirt instead of actually. So a lot of things, beneath the surface, and this is why the good economic data won't last. If you look at it, this isn't really something bullish to be on. The cars are selling because they're margin compressing, so they're losing money. This isn't good. And then it says here in Zero Hedge, they're the only one willing to cover it. Sales beat thanks to another massively downward revision. And that's the main reason. So, and the cars, due to autos, dealerships are slashing prices. We went over this. We covered this in my videos before. So, and this is like goes back to my thing that we're going to start seeing really bad economic data. This is a lot of this is also due to lower gas prices. So when they released the SPRs, Strategic Petroleum Reserves, those went up. And that counts as economic activity. So that's why you see. And then look at this. I was always saying the Fed's going to reverse course. It's not going to be a soft landing. St. Louis Fed says it's time to approach rate cuts. And I don't think this is the only rate cut. It's going to keep going down just over time. Time is nearing. It will be suitable for the Federal Reserve to start lowering rates. So they're leaning towards a rate cut next month. So yeah, go figure. So anyway, that's all I have to say. You can see right here, they're cutting rates. Looks like gold keeps going to 2,700 to 3,000, and then bad economic data. And what will either happen? What I think will happen is when they cut rates, regardless if there's even bad economic data, when they start cut rates and this goes through in system, inflation is going to run up again, and it's going to run up big, and they're going to have to crash the economy. So there's going to be huge, and there's a lot of commercial real estate, housing bubble, auto loan bubble. So that's commercial real estate, residential housing bubble. There's a auto loan bubble and credit card debt. All those are going to crash starting sometime and the problems are gonna be apparent in 2025. And we're gonna see a lot of problems. I don't know if the market will crash in 2025. It might begin. It's very tough. I might not do a yearly prediction next year because such a more of a wild card than this. Like this was easy. They were gonna lie, manipulate the economic data. They're eventually gonna reverse course. It's an election year. They were gonna juice up the stock market. Gold was gonna go up. You can tell. I do think we'll start having inflation problems next year. Again, I think they're holding it off, but we'll see what happens. Hit that like button if you listened all the way through. Uh, subscribe if you already haven't, and I will see you next video.